right? Sure. Okay. Can you see my screen?
Yes.
I'll take this
Yeah.
off. Okay, so yeah, that's it. We're gonna talk a little bit about economy, investment, human nature, and Bitcoin. So I didn't want to say Bitcoin because only Bitcoin because everyone would think, yeah, I will show how data should buy Bitcoin. It's not the case, right? And another thing is we are not going to really talk about any technology at all. I have Stosh mentioned about mining, all those things. So we are gonna skip all those things. Mining, what's the name? Oh. So the technicality of Bitcoin, forgot. Let's just kind of try blockchain. Exactly. Yeah. Yeah. So I'm gonna skip all those because it's supposed to be more for everyone rather than some guys that like the tech stuff. And yeah, so basically what we're gonna try to do here is give some rationality about the crazy price of Bitcoin at the moment. So, and I'll try to go to those items that I'm saying here to explain that, and at least try. So it's a lot of things. So I'm trying to do that in 30 minutes. So basically, Bitcoin is volatile, not as accepted in any shop, and probably will never be accepted in any shop, and it's quite expensive, right? So high price, not regulated, but a lot of people is investing on it, and the question is what people is seeing that we might not be seeing. And to answer that question, so we need to look a little bit about the economics, investment, and politics and human nature, basically. In short, the short answer for that is basically people it's hedging against money printing, and therefore against inflation and currency depreciation. So more money in circulation, less your money really worth, right? And that's what people is trying to do. It's trying to keep the value of their wealth, right? So with all this money printing, so people's savings are kind of losing value and consequently getting poor, right? And we have seen that. So we have seen that in many times in the history. So especially after the World War One and Two, so many countries had problems with inflation, and I think the main one in Europe was Germany. Most recently, you have the same problem with Venezuela, Argentina, and Zimbabwe, basically. So that's an example of high inflation, and where the Bitcoin could have played a very important role to keep the people's wealth. And I will use those countries to show you guys how Bitcoin is not the most dangerous currency in the world. And you're gonna see that small and undeveloped countries' currency it's riskier than Bitcoin for them. And so, for example, here, if you have bought Bitcoin on the all-time high in 2018 and have sold on the bottom, we would have lost 77% of your investment. But if you have bought Brazilian real, which it's my case, you have lost 67% by now, right? And if you have bought Argentinian peso in 2018, you have lost 390% of your wealth. And if you have lost, I started with Brazilian, so so if you have bought Venezuelan bolivar, you have lost millions% of your wealth. And just to not show that only South America it's screwed, one more here, the lira, you'd have lost 90% of your wealth. So imagine, like, if you had 1,000, it would be 100, only 100 in your hand. So this is to show kind of that Bitcoin is risky and volatile and all the things, but actually it's not the worst currency that you can invest on. Even when it went all the way down and no one was talking about that. And why did and the question here is, why did all those currencies depreciation happen? And it can be very many reasons that why that happened. So political instability, closed market, socialism, and low interest rates, and many other things. But today I'm gonna kind of talk a little bit about the most important one, that I think is country debts, right? And so basically, if the government debts are much higher than the GDP, it will put the country in a complicated situation, because nobody will make any longer term investment on the country, and the government itself will not be able to do investment in the country, and you'll not be able to get more money, borrow money, right? And if it does, the interest will be very high. It would make the situation more complicated. And the thing, so what happened now, why Bitcoin is going so up, is because with the pandemic, more countries will have problems paying their debts. And when that happens, what the government will do? Print money to pay their debt, of course. And the problem of lack of international investment and printing money will definitely make currencies depreciate, and consequently, because most of countries can import things from different places, that it's negotiating dollar will become high inflation. It would come for those countries. And so in Europe, to not say that it's only in South America. So in Europe, recently you had a curious dynamic with with Greece, right? They were about to default on their debts when the EU helped them restructure their debts, and in return they get the government austerity. But before all that happened, the Greece considered to leave the European Union. And why they considered leave the EU? It was because being part of the EU and using euro, they will not be able to print money to use to pay their debts. And so that's why they considered to leave EU, because it's one option that countries have to pay the debts. It's print more money. And in the end, they didn't leave EU, and the question is why they didn't leave EU and consequently be able to print money and pay their debts. It is because by now, if they have done that, the currency would be worth less, similar to what you have in Argentina. Because when we print loads of money to pay debts, the first thing that happens is the confidence of people in the currency itself go really down, and that was better to them do all the austerity that they did, and try to recover for that situation. So, and here, for example, you can see that the debt of Greece is very high, and almost 200% of the GDP. That it's crazy. So just for a comparison with Ireland. So Ireland, in some point, has a very big debt, over 100%, but it's recovered and it's kind of in a good shape in 2019. And I think ours have noticed that back then there was a lot of austerity as well, I think. What's next? So basically, credit and debt plays an important role in the economy, and understanding this will help you to understand the world you are living in. And I'm not really able to explain all that to you today, but I would like to play a video which gives a little introduction how credit and debt really plays. What's the role on debt and credit on the economy in general? And knowing those things, you can help understand how things works in every country. I will try to play this one here. I put on a bit faster. Let's see. It is a bit, so I hope you like, just to show you guys, maybe make you guys interested in see the rest of it. I'm gonna play it quickly.
But many people don't understand it, or they don't agree on how it works, and this has led to a lot of need.
So are you guys still there? Just I'm being too fast here. I'm trying to. Can you hear the video?
Yeah, all good.
It's playing fine. Okay, yeah.
Economic suffering. I feel a deep sense of responsibility to share my simple but practical economic template. Though it's unconventional, it has helped me to anticipate and to sidestep the global financial crisis, and it has worked well for me for over 30 years. Let's begin. Though the economy might seem complex, it works in a simple, mechanical way. It's made up of a few simple parts and a lot of simple transactions that are repeated over and over again a zillion times. These transactions are above all else driven by human nature, and they create three main forces that drive the economy. Number one, productivity growth. Number two, the short-term debt cycle. And number three, the long-term debt cycle. We'll look at these three forces and how laying them on top of each other creates a good template for tracking economic movements and figuring out what's happening now. Let's start with the simplest part of the economy, transactions. An economy is simply the sum of the transactions that make it up, and a transaction is a very simple thing. You make transactions all the time. Every time you buy something, you create a transaction. Each transaction consists of a buyer exchanging money or credit with a seller for goods, services, or financial assets. Credit spends just like money, so adding together the money spent and the amount of credit spent, you can know the total spending. The total amount of spending drives the economy. If you divide the amount spent by the quantity sold, you get the price. And that's it. That's a transaction. It's the building block of the economic machine. All cycles and all forces in an economy are driven by transactions. So if we can understand transactions, we can understand the whole economy. A market consists of all the buyers and all the sellers making transactions for the same thing. For example, there is a wheat market, a car market, a stock market, and markets for millions of things. An economy consists of all of the transactions in all of its markets. If you add up the total spending and the total quantity sold in all of the markets, you have everything you need to know to understand the economy. It's just that simple. People, businesses, banks, and governments all engage in transactions the way I just described, exchanging money and credit for goods, services, and financial assets. The biggest buyer and seller is the government, which consists of two important parts: a central government that collects taxes and spends money, and a central bank, which is different from other buyers and sellers because it controls the amount of money and credit in the economy. It does this by influencing interest rates and printing new money. For these reasons, as we'll see, the central bank is an important player in the flow of credit. I want you to pay attention to credit. Credit is the most important part of the economy and probably the least understood. It's the most important part because it's the biggest and most volatile part. Just like buyers and sellers go to the market to make transactions, so do lenders and borrowers. Lenders usually want to make their money into more money, and borrowers usually want to buy something they can't afford, like a house or a car, or they want to invest in something like starting a business. Credit can help both lenders and borrowers get what they want. Borrowers promise to repay the amount they borrow, called principal, plus an additional amount called interest. When interest rates are high, there is less borrowing because it's expensive. When interest rates are low, borrowing increases because it's cheaper. When borrowers promise to repay and lenders believe them, credit is created. Any two people can agree to create credit out of thin air. That seems simple enough, but credit is tricky because it has different names. As soon as credit is created, it immediately turns into debt. Debt is both an asset to the lender and a liability to the borrower. In the future, when...
Okay, so the video is 30 minutes, and it's pretty interesting thing. I suggest you guys to check it out. I'm gonna share it later. But for now, just that. Let's just continue on the presentation here. If you go and watch the video, you're gonna kind of learn that when countries cannot pay their debts, they will print money, and also it will adopt some austerity measures for reduce the debts. But the consequence of printing money is the inflation always comes, and that would reduce your kind of wealth or your capital, right? And you should kind of have that in mind and try to protect your wealth when that happens. And that's a little bit to explain Bitcoin. So we are gonna get in Bitcoin at some point, but before starting to talk about Bitcoin itself, let's just learn a little bit what it's money in actually. So, and the money, how we know it each day. So how we know money today, it's called fiat money, right? And it is basically government issued currency that is not backed by, is not backed by anything, but only by the government that issued that currency, and by some policy that the government follows. So in the past, currency was backed by gold and silver, but that's not the case anymore. And I think a lot of people still believe in that currency is backed by gold, but that's what's changed like almost 50 years ago. And that really, what that means is that fiat currencies and Bitcoin is basically backed only by the people's confidence and its value, right? And so if you ask me if I want 1 million pesos, Argentinian pesos or bolivars, or 1,000 of Bitcoin, I choose Bitcoin, right? And not only because it worth more, but because it have more confidence in Bitcoin. I have more confidence in Bitcoin that those government currencies. Those government currencies even people that lives on the countries itself, they don't believe in those anymore, and they already transactioning using other currencies for do those things. And so Bitcoin has more value than some government currency, as you can see. And so another thing that Bitcoins, why I chose Bitcoin is because you can change to another currency anytime, and it's not the case for some currencies. You are not really able to change those currencies, and that means it has people is losing confidence on many currencies around the world. Having that said, that money it's basically what people believe, what the confidence that people think it's the value of the currency. Let's move now and check what is Bitcoin actually, right? And first, Bitcoin is not a currency, and because you cannot go to a supermarket and buy food with Bitcoin. And Bitcoin will never be a currency that you're going to be using for this kind of transaction. Bitcoin transaction, it's slow and it's expensive. So Bitcoin transaction can take up to 60 US dollar to be processed. So that basically the fee for the transaction can take 60 US dollars. So imagine you're going to supermarket to buy one bread and pay 60 of fee for the transaction. And another problem of Bitcoin is the average time that the Bitcoin transaction take, it is 10 minutes. So imagine you're in the cashier waiting for 10 minutes for that to be processed. So what is Bitcoin then? And why people it's still betting on this? And this basically Bitcoin, it's a financial asset, something like gold, like Bitcoin is a mechanism to store value, and that's basically because your scarcity and some other advantage. But why people it's betting on Bitcoin is mainly because it's scarcity, and that will keep the value and will not be inflated by more Bitcoins, because there will be a max number of Bitcoin, and the max supply of Bitcoin is 21 million Bitcoin. Because of that, basically, it's unlikely to depreciate over time. And so Bitcoin is not a currency that's like the idea of use Bitcoin to buy things. It is a very old idea, and that it doesn't make sense anymore. So the next question, it's Bitcoin price too high? And that's obviously relative. So if you compare Bitcoin to how much it was last year, we can say that it's pretty high, and it has raised 800% in 1 year, so 8 times the price. So it went from 5,000 to 6,000. However, Bitcoin consolidates as a store value. If Bitcoin consolidates as a store value and takes a portion of the gold market, some people say that Bitcoin can reach up to 500K. So I still have a lot of room to go up. But of course, people have to start really consolidating a store value and replace gold with Bitcoin. So basically, if that really happens in 10 years, we might look back and see that Bitcoin was not too expensive, or the price was not too high. But the thing is, Bitcoin was not the only asset, financial asset that went up crazily, right? If we see those some example of companies that went up as well, like Tesla went higher than Bitcoin, for example. Like Zoom was crazy high as well, Peloton, and even Apple, Google, and others that was already high went almost doubled. So one thing that we learned that it is like, when it's printing money and all those things, the first thing to inflate its financial assets. So we are in a big crisis. But if you look around, the houses price didn't really went down, and that's it because it's a lot of money was introduced on the financial system, and a lot of people it's so a lot of, when you have a lot of money, so the financial assets go up. So Bitcoin has your risks and everything, and we learned that don't do anything has risks as well, right? So if people that was investing on those countries that has those crazy deflation, currency deflation, would have lost even if they were buying houses or any safe investment, right? So now all those about the economy and the world we live and its risks. So you might be questioning yourself, what should you do to protect your capital or wealth? And the answer is it's quite simple. So you have to diversify your investments, thinking the long term, and basically play safe. And so you have to diversify in different assets. So invest in different business, house, real estate, funds, bonds, and other things to kind of keep your wealth. But you have to diversify in different currencies as well, as we saw. The people from Argentina or Brazil or Venezuela, they could have done everything right, but by now they would have lost their wealth quite a lot. And so different currencies is also important, but not only different currencies, you have to invest in different countries, right? Because in some those countries that had those big depreciation in the currency, they couldn't really get the foreign currency because the government took that and said that they would not have anymore. So if you keep the custody of those currency on your country, those countries that it's going down, can be not enough. So you have to diversify in countries as well. And thinking a long term, it's basically whatever investment you do now, you will see that in the future you're gonna thank yourself, because those variable investment goes down in some point. It had some falls, but in the long term, it's always go up. Right? You can see here, for example, Nasdaq over the year. So you had some crisis, right? 2008, big drop here, but went up. Now you have again with Corona, big drop here, but it went up. So in the long term, things it is most of the time go up, and so what don't go up if you keep your money seated on your bank account. So probably not going up, but instead it's going down because inflation is always going up. And so I think the next question would be, should you invest in Bitcoin? Considering that Bitcoin has went up so much, and even though we know that they still have room to go up, we don't know, to be honest. We never know. But one thing that I can say it is that rich people, it's definitely investing in Bitcoin because all those reasons that I have said here. And most important, companies, it's really investing in Bitcoin. And it's important to know, I think the good thing about company investing is first because you get to know, right? So it's public company that invest in Bitcoin. And the public company, they are not like gambling on Bitcoin, right? It's not buy now to sell in few months to make money. But they are really keeping those things on the balance sheet, and it's really, they are trying to keep the value of the money. So the big company has a lot of cash. So, and they are those that suffer the most with 5% inflation or like that. It's represent a lot. For example, Elon Musk have invested in Bitcoin, was $1 billion, but that only represents 1% of his wealth. So people that has knowledge and access to the information, it's really betting on Bitcoin, I can say that, or invest in Bitcoin. And in Bitcoin, it's one more technology, and technology usually the adoption order, it's basically insider first, like people that was like nerds that was using Bitcoin to buy things on the deep web or something. Then rich people will be on those because they have money, enough money to risk. They want to be with a small portion of it to try it out. And then I think the rest of the people, right? So, and I seems that now we are on this phase of rich people investing and investing through companies. And so basically, I personally think that everyone should invest. Like not everyone, but people that invest, that have the mentality in investing, should have at least 5% in some risk assets, and Bitcoin would be included that, but not only Bitcoin. And the logic to expose to high risk investment, it's basically thinking if things goes well, no, if things go really bad, you will lose 100% of your investment. But if things go well, there is no limit for profit, right? So Bitcoin, for example, who invested back then, let's say 2008, 2018, let's say, like when Bitcoin was on the top, and they kept that, so they could lose everything and it would be 100% in the following year. But if they just kept that, they now had almost more than 800%, right? And things can still go up, and there is no limit for profit. And so that's why I think a small portion of your, let's say, capital should be invested on kind of high risk things. So not only Bitcoin, but let's say turnaround company and peer-to-peer lending money or anything like that. Really small portion, it will be fine. And one thing that we can really predict is that fear, greed, and panic, exuberance as well, and irrationality often rule investor decision. So you should be careful and hold on your nature greed. So the recommendation for any investor advisor is not to allocate more than 10% of your capital in high risk investments. And most importantly, don't invest what you don't know well. So what we are doing here, I think it's kind of educate ourselves, knowing that risk it is everywhere anyway. And so I think it's important to say as well that investment will not make you rich, like most of the time will not, but it can help you get there, and most important, keep your wealth. But what to really make you rich, it's your work, right? So the best investment is it's in yourself. So make sure you invest in yourself before betting in a technology that you don't know well. I think that's the final message.
The last one is a good one, Alex. You quickly switch from investing money to investing in yourself for your own personal growth.
Yeah,
that's a good one. Yes,
exactly. So at the end of the day, it's your work that's gonna make you a comfortable life on your retirement.
Thanks, Alex. I'm gonna just stop. Okay, we're not recording.